Quick disclaimer before we kick off, guys. So Master of the Markets and all ASX trader myself is a corporate authorized representative of ShareX Australia, and this information provided is for educational purposes only and does not constitute financial advice. A little bit about me. I've got a Bachelor of Education. I'm a certified financial technician and a certified level 1 Elliotician. All right, let's get into it. Hi everyone, thanks for tuning in. Today's video is proudly sponsored by Moomoo. Just a reminder from last week, we have now partnered with Moomoo. Reasons for it being, there's three major things I always look for in a broker to buy and sell my shares when I'm trading, and that is affordability. Moomoo offers $3 Australian trades and as little as 99 cents for US trades. So nice and cheap to get in and out. The other really important thing I always look for is, are they CHESS sponsored? That is for asset protection. So if for whatever reason the broker went down, I know the assets are in my name, so I can just transfer them somewhere else. And I look for that they have Australian and international shares as well. And Moomoo has both of that. So it covers all three major things that I look for in a broker. And most importantly, ease of use of the platform and things like that as well. So we have our launch offer for Academy. If you sign up to Moomoo and fund your account, you'll get access for a month to our Academy. Then within there, I'll be drawing from all things today around that, so you can see why I entered trades and things like that. And you can see firsthand what other people are seeing in there. Okay, so the options are, if you don't want to then do that one, make sure you do sign up to join free Academy as well. So in that free Academy, you'll get access to charts of lots of traders and things like that as well. And we do offer a lot of exclusive things in that free section as well. So worst case scenario, make sure you sign up for free. And if you really want to, once you sign up for free, we do offer a 7-day trial as well. So you can test it out. And I guarantee you after 7 days, you'll be hooked. Then after the 7-day trial, you can then sign up to the Moomoo offer as well. Alrighty. So anyway, let's dive into the charts and see what we've been looking at. So the first one I want to talk about is DYL, okay? Because DYL was one that you guys know I did a YouTube video about it a few weeks ago. I plastered all over social media around uranium and in particular why I went on DYL, okay? So DYL was here and entered once we changed microstructure back up through here, okay? And we had a nice run from $1 to $1. And it went up to $1.40 yesterday. And that's when I said I was going to sell. So this is the free section here, ASX Trader Public. Anything I post on social media, I put in here. Okay, and this is where I talked about this one, DYL. Good thing about this is if you ever miss any of my posts or anything like that, you can actually come up to the notifications up here, turn on settings, come down to ASX Trader Charts and turn on the in-app notifications. So if you download the app, get the notifications, you'll never miss one of my social media posts again. You can actually get it in real time, because even something like that, do I sell it at $1.40? It's now $1.33. So just reasons why, and you can see, and I'm going to explain those reasons why I exited today. Okay. So hang on, back to ASX Trader Public here. So in at $1, so 40% growth. Okay, one of the biggest things I'm up 40%. From here, the risk is now greater than my reward, so I'm locking in profits. One of the things I always look for is when I buy it, there's more bull reasons than bear reasons. When I sell it, it's the opposite. There's more bear reasons than bull reasons, and it's really that easy. What you've got to do is think of trading very much like a balanced scale. So think of it like having a scale like this, and you've got your weights. I mean your buckets on each side. So when I took the trade, there was so many bull reasons over here that it weighted this thing like that. Okay. However, when I just exited, I then was able to then start to build up a case why I should short it here. So then a couple of these reasons here started to disappear, and then this started to build up, and it started to then tip it a little bit more in this side than that. Doesn't mean it can't keep going up. But what it does mean is the probabilities are no longer stacked in my favor like they were when I took the trade and held on to it until it hit to 140. Okay, and that's all you do. You always become the casino, and you always just stack the probabilities in your favor. You enter a trade because the probabilities are in your favor. You exit a trade when the probabilities are no longer in your favor. Okay, when it starts hitting zones and you can justify a short position, because you've got to remember markets move on supply and demand. There were a lot of reasons why demand would step in down here at $1, because there is a lot of bullish reasons. Here, there's going to be a lot of reasons why people will start to sell, which means that there'll be a lot of supply coming online, just like mine came on. Okay, so that's the way you've always got to think about it, because every day you're holding it, you're essentially saying you would buy it. So what you've got to do is pretend you don't hold DYL. Would you buy DYL right now as a trader, not as a retailer that knows nothing about right now where it is here, right now? You wouldn't, because if you were to buy it now, where's your stop loss going to go? It's got to be all the way back here. You know, the risk is not worth the reward up from here. You know, so if you start looking at what it could do from here, there's a lot more reasons why it should start to reject soon, anywhere from here to $1.50 kind of thing, than it is that. And then if you start using it as if you would buy it today, that's me buying it at $1.40, and I go, well, man, the risk is maybe it even comes back down to the zag zone. You know, I'm risking 26% now for what? Another to here, best case scenario resistance. There's more red than green from this point. So that's no longer fits my trade plan. Let me show you a real life example I did a few weeks ago and how it perfectly played out. So let me come back to here. I'm going to type in DYL. Enter. Oh, sorry. Search, not enter. Get out of there. DYL. All right, so when you type in search, you can pull up all the things. Whenever I've mentioned DYL, you can see people have been talking about it, but this is the key one here. Capital rotation in action from NEM to DYL. So this was as it happened. Again, this isn't me cherry picking stuff. So I just exited my NEM trade, locking in profits from position. I'm now rotating that capital in DYL. For me, this decision is about risk to reward. At this point, I see more risk than reward remaining in NEM in the short term, whereas DYL presents a setup where there's more reward. So this here is April 24th. Okay, so let's go to April 24th now and look where that is. That's here. So this one had just changed market structure and we'd broken out through here, back through here, and we're at sitting around that, you know, just under $1. Okay, now let's look at NEM during that time. NEM at that same date, 27th, was here. Okay, we then have sold off. Okay, so from that point there, this is down 10%, and DYL is up, as you know, 40%, as I just showed you. So this is what people don't get. When I sold my NEM trade, and on that NEM, I was up 33%. I sold something, I was up 33%. I locked in my gains because no longer was the reward worth the risk. I rotated into DYL because it was the opposite. So going back to my balance scales, okay, when I entered NEM originally, it's because it did this. I've now exited it because it started doing this. There was more reasons for it to go down from that point forward than it was up. Doesn't mean it won't go up in the future. I'm talking about short term, over the next month. That's what this account is for, about making money each month. Okay, so then my risk was higher than my reward. Whereas when I entered them, my risk was lower than my reward. And that's what I'm looking for. Then when I entered DYL, there was more reward than there was risk. Okay, so rotated, locked in my nearly 34% gains. I then rotated it into DYL on that date, and I've made 40%. But this is the thing, I haven't just made 40%, I've also dodged a 10% pullback on them. This is the part you don't realize. So by me holding them, essentially I would buy it that day and I'd be down now 10%. Okay, so I'm actually better off 50% because I made 40% on DYL and I dodged the 10% pullback on them. So I'm now 50% better off. So it's actually a 50% more in my account growth now because of doing that rotation. Can you see how it makes sense? So this is why in that post I talked about, it's like an ex-girlfriend, don't look back on it. Like, who cares if it keeps going? It no longer meets my criteria, which means my criteria is that there's more reward from here than risk. Okay. And I can justify a lot of reasons why I would sell and get out at this $1.40 zone. If it keeps going, so be it. I don't care. You can keep going to the moon, because I'm not now going to sell that money and have it do nothing. What am I going to do? I'm going to find something bigger and better, like I did when I rotated from NEM to DYL. So all it's about now is rotating that money into a better opportunity that has a better risk to reward. And there is no way I would be, after locking in 40% gains, buy that now here when we're at a major resistance. It's the decline coming down. It's the fib extension too. So if this is an ABC, this is where it would reject. It's also the fib 618 coming down. Let me just get off the log. It's also the fib 618 from the rejection zone. So from the ZAG, fib 618. It's also the fib 2.618 off the log. So, there's a lot of reasons where if this is a wave 3, it's probably at its key zone. If it's a ZAG, it's probably the key zone. It's the decline. You're starting to get really overbought. Then when I started moving into the smaller time frames, I started to get divergence. Okay. So that's why I was like, you know what? There's more. I'm starting to see this expanded ending diagonal. Okay. So that's why when I started seeing that, I was like, you know what? Ending diagonal into a key zone on bearish divergence. Why play with fire when I don't have to? I'd rather sell, lock it in, and go and find a better setup. I'm expecting this to probably bounce today, come up, and then we'll see if it puts in a double top or puts in a lower high. And if it does that, then, you've definitely got your exit. But even now, it's already down 3 or 4%, which I've already saved 4% just from that. And now, again, I'm looking for the next opportunity, which I'm going to identify today, because today I do my weekly trades, which is where I go through and I unpack things. The students come through and tell me what they're looking at. And it's very, very, very rare that something doesn't come up. I'm like, oh, I want to get in that. All right. So that's events and upcoming, this one here. So on a Wednesday at 12 o'clock today, I'm going to have hundreds of students coming on. And the best thing about this is these are trained students that know my strategy, know what I look for. So it's 100 trained eyes out there that go, hey, this one looks good. Can you check it out? And then I go through and talk about the TA on it. So it's almost like a scanner for me. And it's very, very rare that I do not find something good. If anything, sometimes I'm already maxed out. And that's why I then have to look, okay, does this have more opportunity or does this have more opportunity? That's always what you've got to think about. Does this thing that I'm seeing right now present more opportunity than something else that I already own? So a tip that Frank Watkins told me. So Frank Watkins, he's been trading for over 50 years. A tip that he says that this was the biggest light bulb moment. It makes so much sense. Is he goes, at the end of the month, look at what's in your portfolio and drop the worst performer. And I'm like, oh, wow, that actually makes lots of sense. But we don't. What do we probably do? We probably ditch the best performer because we're like, oh, let's lock in gains, that kind of thing. But if you're looking at your swing account and you're trying to run, if you were to drop your worst performer, then I guarantee that you're, I can't say guarantee, but you know what I'm saying? I bet you look back and be very happy that you probably implemented that strategy. Because if it's performing well, it means it's either in a downtrend, not doing well, or it's in a sideways trend, which means how much longer could it be in a sideways trend for? All right, anyway, on to the next one. Another one looking at is South 32. So we're not looking at sorry. So again, this one was a beautiful change of market structure back through a support resistance. So we've got our confirmation off here after a nice leading diagonal going in. Reasons why you can see when we break major support to grab liquidity or continue the trend, you can see that this one came down on lower in volume, higher lower in volume, lower in price. But the main thing that stood out for me is we went long on this one back here and we made a good trade and I sold half here and then got out the rest to pretty much break even. But when we were up here, we identified, Shane actually, I think, had identified our master elitician. He had identified another new low. So we're here going, oh, okay. Didn't expect that to play. Oh, so it wasn't there. It was this one here. So when it was up here, because he identified this as a 1, 2, 3, 1, 2, 3, and then 1, 2, 3, 4, 5 as a expanded flat. Take out the high, take out the low, continue the trend. Whereas what we thought it was the beginning of a new trend, the 1, 2, 3, 4, 5. And this is why it's really important to always look back. But this is, the benefit of having a master certified elitician is he kind of makes you think at things that you might not think about. Doesn't mean I exit if he has the opposite to me, but it just means it makes me think about, okay, where would I exit? And you can see, if you can see that, once you change market structure, why would you be there when you know there is a potential for another low? But anyway, back then, so we're looking at, over a year ago, we identified if we lose this support, that 240 zone is a huge level of support. And that's what I talked about here back a few weeks ago. And then what I did was combine it with a bit of, so weekly. Yeah, here we go. So a year ago we did, so April 18th, which is, almost a month ago. So a year ago when we did a deep dive in South Asia, we highlighted critical support level. We said that if it broke that zone, the 240, 250 region would become a major confluence. So the great thing about this is I've done all that work with no bias. If anything, I had bullish bias and it actually went the other way, but without emotion. It's all data driven. So I had that. So where now? What does that mean? It means the prep work's done. Now comes the real skill, patience and confirmation. We're not blindly buying just because the price arrived. We're watching closely for a change in market structure. Something signals the strength. Okay, so a lot of key things. We came down to the level I identified from over a year ago. We're getting it on lower in volume. We're getting really oversold. So then I started doing a bit of prep work. Okay, so let's go back to back to South 32. So I started not only looking at technicals, I started also looking a bit at the fundamentals as well. So 18th on the same day, started diving in a bit. Started looking at the fundamentals, which is where, again, you can compare to other ones. And then I realized that South 32 was the only share in the top 50 that was trading below its book value. Book value means that if they were to sell all the assets today, it would be valued more than what it's currently trading. Book value is $3.29. It was trading at $2.69. So there's a disconnect between the value of the assets to the value of the price. And if you start looking at the book value of its peers, BHP 2.2, way off, 1.72, 1.86, yet it was 0.86. So book value was telling it. Then I started looking at some other things here, EBITDA, and it was showing that it was fundamentally undervalued. There's a few little, possibilities of this, if this mine does this or that, but that's the kind of thing. Then you got to wonder, is that now priced in? Okay, so that's why then we started looking at it. And that is where then once we had the change of market structure, and especially here, change of market structure back through your level there, then you are good to go. All right. So little things like that can be really powerful when you pre-plan the possibilities, because then you can act on the data instead of emotions. What do you think people were feeling when we bottomed out there? Extremely fearful, because we just went from 350 down to 250. Okay. It dropped 30, 40% instantly. Okay. But this is the beauty of following data. Okay. So that one's now in. Change your market structure back through. This is pretty much the exact same setup as DYL I showed you, 4 major support, change your market structure back through. It's one of my on bullish divergences. I love that kind of thing. So from here now, we can just draw up our fib zones, and I'm not happy to call a bottom until we get through here, 330. Because see that could just be the zag zone. Okay, and we may just come into this zone here. If we can get up through here, then I'm more excited, because then we break and decline. We're breaking back through major support. This is where trap money will be, back through the 618. Okay, so that's what I'm looking for, to then be like, yep, things are looking really good, but it is giving me markings of a bottom because I had identified that a year ago. Fundamentals are aligning with the TA, and that's what I'm looking for. So this isn't a short-term trade. I'm not looking to make money off it here. This is one that I've added into my super, my long-term, and it stays there while it goes strong, but I need to break out above here. So what I'm hoping this is just accumulation. Okay, so you can see you've got resistance sellers here. You can see you've got buyers here. And then you can see, I'm hoping this is the spring. All right, so once we're there, maybe you get a chance where it comes back here and go up through there. What have you moved? You've gone from your downtrend phase into your sideways phase with your spring on lower in volume, and then boom, marks the bottom. All right, so that is what I'm looking at on that one. All right, talked about SYR. That one's done extremely well over the last little while. So again, talked about this one here as, you know, this is pretty much what I'm thinking with South 32. See, equal there, spring. And see how we got that other low? That's what, I guess, if you're not in South 32, you're hoping happens. And then you can be like, well, hang on. Why is it buying there again? What's that? It's your spring to grab your liquidity. And then you break through, all right? So nice accumulation base here. It's broken through. Why aren't they selling here anymore? Really nice. It is very extended now. So if you're not in it, you've got to wait for the pullback. You could not take that breakout. Okay, and this is a really good example of, even though it could meet all your criteria, you can't actually take the trade because of the risk to reward. If you were to take that breakout, where's your stop loss? It's got to be under this little pivot under here, which is too far. On top of that, I would never take a breakout if volume's not confirming it, and OBV didn't confirm the breakout too. All right, so whenever I take a breakout, it has to have volume confirm the move, and it has to give me a good R&R, which means I wanted to see a pivot before it went out, because then I've got a good R&R. If I don't have volume confirm and I don't have a pivot, then what I do is I wait for the pullback. And, you know, I saw Ben post about it, and I was like, look, this kid's just turned 18. He's our charity cohort winner, and like, he's just absorbing information like a weapon. I'm so proud of him, and he was chosen for that reason. He's been in stocks since he was 14 in there. He'd always been commenting on my post. I'm like, this guy's got energy. He's going to succeed with or without us. So let's help him along the journey and shortcut it, you know. But let me show you. He took this in. So for those that don't know, we also have a free Facebook group. As you see, 31.1 members here. It's ASX Share Trader for Beginners. It's where I've been in. It's my group. I've been there for over 5 years. This is kind of where I started to build my reputation, you know, calling COVID bottoms, 2022 tops, lithium tops, things like that. So there's a lot of my students from MTM are in here. So you'll see a lot of quality analysis, people that have been trained properly. But I just want to show you the one that Ben posted recently. So here it is, just 15 hours ago. So SYR daily. There's been a lot of noise around SYR. You know, everyone's going to be, I'll understand the excitement. Let me be the voice of reason. Now, look at this. He's already aware of emotions. Price has increased nearly 100% in less than a month. It's true. I have it. Okay, you would require to take profit 91 from the current. So what he's now seeing is, you know, really overbought, shooting star, potential bearish, like OBV is not confirming it. We're at the 1.618. So he's saying the same thing. We've broken this. At least now wait for the the pullback into the zag zone. And then he's saying you probably get a good hidden bullish divergence or something off there, off that move, off the change of market structure, and then you take the breakout there. It's exact. I just couldn't be prouder. You know, like, this is an 18-year-old kid on the scholarship, only just finished the MTM 101. And I'm not like already seeing this quality analysis and everything that he's already prepared. And if it goes without him, who cares? There's another one, you know? And that's the thing I was trying to say with DYL. If it keeps going, who cares? There'll be another one. All right. These are dime a dozen. They happen all the time. If anything, they happen too often. You can't be on all of them. So you don't have to be on all of them. You just got to be on a couple of winners, and then you just keep rotating. And when those winners start potentially turning to losers, you rotate into the next winner. Just rinse and repeat, rinse and repeat, rinse and repeat. All right. But this is what I'm trying to say with SYR. You could not take that breakout. You now have to wait for the pullback. Okay. Another example from there was NVX. So NVX got in, as you guys know, a couple of weeks ago on the change of market structure through here. So up 30% right now. We have come to a major resistance now. So if we can get, as you can see here, yoink. So old support, old support, old support, resistance. We just need to get through there. I don't think it will reject here, or if it does, it will just be a little pivot. Okay. So I'm not selling just because it's at resistance, but I am prepared that if it did do this, if it did reject here, And then if we buy off here and it puts in a lower high and changes, I'm not going to be hanging around because that's still a 3-wave move into a major resistance. It could just be a zigzag and keep rolling over. Or this could turn into a double bottom or something. So yeah, anyway, I'm not hanging around if it does reject here and change market structure. And it's really that easy. Another one to look at was one where, things were looking really good and we exited. So this one here, this was one that I did on that weekly trades and I talked about, everyone's really bullish on LYC right now. I just want to show you the bearish scenario. So again, show you what I talked about. So these are all the reasons to be on it. So here, never hold on to something that enters zag zone, exits on change of market structure. Okay. So what I mean by that is, and I'll just delete everything. Whenever you get a change of market structure, it could just be a move into the zag zone and then continue the trend. Okay. And the level I said I'm looking for to get above is 920. 930. Once we get above there, then I can sit back and relax. Anything under that could just be a zigzag and that. As you can see, we came into the zag zone and then changed market structure. Look there, lower high, change of market structure right there, and then it's fallen out. Why would you be there? Again, you got to look at this as if you would buy it today. Would you buy this today? It's in a downtrend. It's gone into a zag, fallen out. I guess your reason you could buy it today is that it's on a trend line. It's on a resistance support. Okay. So maybe you're looking at that. You might be, you know what? I'll hold it while we're here because I can justify holding it here. But if we fall through there, all of a sudden, hang on, I don't have any more bull reasons. It's broken through major resistance support. It's broken through the trend. It's, still got, so then you're like, oh, that's it. So, that's it. You look at it there. You're like, yes, you know what? I kind of might buy it today. But if it falls through 720, I'm out. Me personally, I got out once it fell back through the zag zone. Because again, I don't hold on to things because it could possibly bounce off here and go. What I do is, okay, if I still want to be back in this, if it bounces off here, comes up here and changes market structure back through, then I'll take an entry with a stop below. It's really that easy. It's not like an ex-girlfriend where you break up them, you can't go back there again. Right now, my criteria is not met. However, it will be met if it does this again and I can get back in again. All right, so always got to look at it like that, and I guarantee it'll stop you holding on to losers. You'll just cut them. Something I say to my guys is what you've got to do is open up your portfolio right now and pretend that I'm going to audit your portfolio. If I'm going to come in and go, and you need to justify everything in your portfolio to me. And if there is everything in your portfolio must be doing this. It must be making higher highs or higher lows. So it's in an uptrend, or it has to have one of our 3 major reversals: non-failure swing, double bottom, double top. If you can't show me on that stock where you've got that or an uptrend, then it should not be in your portfolio. And there were a lot of people like, oh, it's that. Well, because it's down so much, surely it's going to turn around. That is the mindset that gets you destroyed. And that's how you get a big loss. And that is how you get this. You kind of like, you miss the thing. You're like, oh, you know what? I'll just hold because I was at 26. Now I'm at 15. I'm down 40%. I'm not going to sell now. You would have wished you sold at 15, seeing where it come down to. All right. Never, ever have anything in your trading account that is in a downtrend, or you can't justify the reversal pattern where it means that it's just turning around. Okay. Massive, massive, massive thing. So pretend, if you've got any trading buddies, get a buddy to come in. Be like, mate, can you check out my portfolio? Give them your, whatever it is, your 10 stocks in your portfolio and say, hey, I'm long on all these. Can you tell me why I'm wrong? And if he doesn't agree with all of them, then you've got to you got to pretend you're from the judge. Oh, well, but this, have you looked at this? Justify why. Because that's what the market's doing. That's what the market is doing, just on a larger scale. Instead of just one versus one, it's millions of people versus millions of people, or thousands, depending on the size of it. But it's thousands of people looking at that stock going, I'm buying for these reasons, I'm selling for these reasons. And at some point there's more buyers, and at some point there's more sellers. So you've got to do that just with a trading buddy and think the same way. Okay. All right. And I'm just going to end with, I don't know if you've got my article from 2 weeks ago. I talked about energy. Energy, I'm pretty sure, is bottoming. We just need that official change of market structure. So it's still going here as well. So I just want to see it come up, reject here, put in a high like that and do that. Once we've done that, we're in. Something I post about with oil. I'll just put it. Oil slipping through the bears. So I have a bit of a play on words, like everyone's really bearish on oil. So this was May 7th, so a week ago. Oil setting up for potential bullish reversal. And this is what I'm looking for. Come up, go, and then break. So if we can do that and get up through that level, what is this? It's everything I've just shown you on some of my trades. Break major support, come down, liquidity grab, get back up. Okay. So that is, let me just show you that here. So again, this is your major support. Major support here. Why did we break and now put in bullish divergence, lower in volume, and potentially coming back up? So if we can, like I said in that picture, come up, reject, because it's put in a higher low and break up through, the bottom of oil is very likely in. And you're probably starting to see it in some big charts like ours, like Woodside has come down, changed market structure, but again, it could just be an internal one here. So again, we want to see it come up, reject this level here, put in a higher low and get up. Okay. So yeah, Santos, BPT is one really that's catching my eye because look at the volume that's coming in here. So you've got a nice impulse here, ABC down, it's come down on lower environment. Look at the volume already. This buying volume's taken out the highs up here. So again, I just want to see it come up, fill that gap here, put in a high low and get up, and boom, that will be a wicked trade there on BPT as well. But yes, notice the volume. This is all come down lowering. This last leg in particular, I just want to see, yeah, that happened. This move in confirmation as well, and volume's already supporting it. So yeah, I have taken an early entry on it, which was through here, support, resistance. So I have taken an entry there, which is something I talked about with the interns. So yeah, we often talk about a few little setups and stuff like that in the interns here. And I said BBT looks good here as well. And yeah, we're all talking about the volume and that. And then once we got the change of structure, I was like, you know what, I'm willing to take a bit of a go here. Even though it's only an internal change of market structure, got a lot of work to do. The R&R looks really good from here. And then oil confirming it for my indices must confirm. Energy looking to bottom. But yeah, it's too early to know that a major bottom's in. But as you can see, the last 2 weeks, energy's been a very good performer. And we'll just have to see if that momentum continues from here. All right, guys, I'll leave it there. But if you liked the video, please like and subscribe. And I will catch you on the next one. Take care, everyone.